Welcome everyone to another episode of the SRP webinar series. Today we're going to talk about AMCs. Although not new to the market, actively managed certificates or AMCs have emerged as a versatile vehicle that offers the opportunity to combine active portfolio management with the simplicity and transparency of structured products. For this session, we have partnered with Vestr and AlphaNotes to explore the AMCs landscape, how they work, their benefits and risk, and why they might be an attractive addition to the investment toolkit. Let's dive in. Let me introduce, first of all, Rico Blazer, the CEO of Vestr, Simon Heisenfratz, COO of Vestr, and Chris Corchino, the Chief Executive Officer at AlphaNotes. Gentlemen, they will be joining me in a minute. Before we do that, I would like to very quickly show a few slides of things that we've picked up from the market. I mean, this part of the market continues to be in a state of flux with an increasing number of players entering this segment across jurisdictions. Most of the activity around AMCs has been recorded in Europe and Asia, although there are green shoots in the Americas, as Chris will ratify later on. The AMC market size is estimated to be close to $2 trillion. And this excludes non-bankable assets, which would increase this figure significantly. We will be talking about that later on as well. Again, quantifying the exact size of this market continues to be a difficult task, mainly because most of AMCs are privately placed, and the term AMC is not standardized. So sometimes they come on listed venues as pure trackers, adding to the complexity of identifying them. Despite these limitations, there are several firms out there kind of gathering some data. We, SRP, we're also trying to collect some data. We are at early stages, mostly because of the lack of that data. We kind of trying to get as much as possible from public markets. But one thing we can confirm is that the increased activity based on the number of stories that we have covered over the last 12 months or so. Let's have a quick look at two charts from the SIX exchange, looking at September, and I think it's quite interesting because we can see here, the top 10 investment products by turnover in the SIX Swiss exchange, and we can all see here that there's a few interesting products and underlyings. Again, the information is limited, so this only applies to public offering in the Swiss market. On the next slide, we can see, the top 10 underlyings, and these again are quite varied. And one of the main, one of the top providers in the SIX exchange that we have identified is a Swiss firm called ISP Securities. There are many other Swiss providers active in this space, but we have also, identified they're actually pioneers in this space, investment banks like UBS, and over the last few years, we have seen other providers active in the Swiss market like Societe Generale and BNP Paribas. Look at the underlying breakdown, we can see that managed funds, baskets of shares, and baskets of structured products are one of the top options, with ETFs and dynamic portfolios also high in the pecking order. Other insights we can find from the data we have seen is that a high number of AMCs are sold with an uncapped participation or callable payoff types of structures, and most of them are capital at risk products. In the news, these are a few slides that I want to show you all, just to give you a bit of context and background about the activity that we have recorded over the last year. And as we can see in Singapore, UBP, which is the APAC arm of the Swiss bank, started to use the AMC wrapper in APAC, across APAC. SBI, which is a Singapore-based firm, has partnered with another Swiss firm called Mavericks, formerly CAT Financial Products, to build an AMC distribution channel. Cornerpiece, also from Singapore, is set to launch AMCs with the help of Vontobel, another Swiss bank. And in South Korea, Craft Technologies is working with Solactive, an index provider, to develop indices for AMCs that are being used by Singapore single-family offices. And also in Hong Kong, we saw Amy Corp reporting an AMC growth in this market. Moving to Europe, we've seen, I mean, this is just, a selection of stories, but there's been many. ISP Group again launched an SPV to issue its own AMC offering and launch a Sharia compliant AMC range to target the MENA region. We saw a hedge fund called Investicorp Tages launching an AMC issued by UBS only recently. Orpheus, a South African UK company, has launched several AMCs on investment grade, blue economic carbon assets, and other underlyings in South Africa. A Swiss firm called Helvetech has launched art linked AMCs, as well as a Bitcoin and a gold linked AMC in Switzerland. And a UK firm called Cross Border Capital launched or relaunched its AMC, which is linked to gold and FX in the UK with the help of UBS. Moving to the other side of the pond in the Americas, which is the less kind of active part of this market, but Chris will probably tell me otherwise. We've seen only recently that Luma, the multi-issuer platform, has added AMC capabilities to its platform and is actively targeting the Latin American buy side with an AMC campaign. So kind of overall, we've seen other developments like, performance. There's Finance Lab CryptoVol AMC, which reported recently a 39% performance year to date. Gen2, which is another Swiss company, has released the first Swiss-based B2B AMC platform. Probably that's arguable. There's other platforms there that could claim that. And also they rolled out an AMC configurator and reported $6 billion in assets under service. One area of this obviously has called the attention of regulator, especially the French regulator, who is targeting AMC sales and distribution activities. And also the Swiss Association has introduced a label for trackers and AMCs on non-tradable assets, which shows the importance of these products are getting. So with that background, I want just to move on to the chat with Rico, Chris, and Simon. Please welcome to the webinar. Give us a little bit of background as of, what are AMCs, a little bit of history. I know that you have, that experience and you've been following this market for many years. So tell us a little bit about what are the AMCs and what the origin story and how did vestr come to the play?
Yeah, sure. No problem. Thank you very much, Pablo, and SRP, of course, for hosting this webinar. It's much appreciated. Very happy to be here. On the question of AMCs or actively managed certificates, these are structured products whose payout is linked to a reference portfolio. And this reference portfolio is actively managed by an asset manager. And so the way AMCs differ from other structured products like barrier reverse convertibles or discount certificates is that one, the underlying assets are not static, but change dynamically over the product life cycle. And two, it's not the issuer that decides at any given time what goes into the AMC, but a separate and usually external asset manager. And so these two features have historically made it very difficult for issuers to use their existing structured products infrastructure to manage such products. Basically, imagine that you're a trader at a bank and you're responsible for a product that someone else can dynamically change. In that context, you need to be very careful and keep your hedges very up to date and make sure that you know what's going on in your products because someone else has an influence on this product. And so asset managers on the other or the buy side in general really appreciate these products because they're very fast to set up. You can literally set them up the same day and even optionally exchange list them on the next day. And they're also a less costly alternative to what's out there to make your investment strategies available. And this is because you don't need a separate legal entity and can actually leverage the issuer's existing infrastructure. And so this brings us to the second part of your question, which is vestr. We're basically a group of ex-traders and quants and some super smart and motivated technologists. And our entire focus is to develop white label solutions to providers of actively managed investment products. So we're completely independent and a pure play technology provider. And this means we don't issue our own products or in any way compete with our customers. And instead, we deliver the tools that allow our customers to provide the best possible service to their clients. We started out with bank issuers and AMCs specifically, and have become very successful there. So 6 out of the 10 largest issuers in Switzerland use our platform. Also, if you look a little bit beyond in Europe, about a third of the top 15 banks in Europe have become our customers. So that's really sort of our bread and butter business, or where we come from. But more recently, we're very excited to also work very closely with SPV providers. And we have an example here with Chris from AlphaNotes. They are truly pioneers in this area, so very excited to hear from them. And in addition, our technology is also applicable to total return swaps and other actively managed constellations, such as separately managed accounts, active ETFs, and even some DeFi initiatives. There, obviously, our market share is still relatively modest, but we're heading in that direction.
That's great. Thank you very much, Rico. Very interesting. And Chris, why don't you introduce very briefly AlphaNotes and how did you get to know, the AMC, space? And I mean, I always thought that in the US, the equivalent would be the separate managed account, as Rico mentioned, but obviously I wasn't aware that the AMC is also being considered by US players. So tell us a little bit about AlphaNotes and how did you get to know AMCs?
Absolutely. It's a pleasure to join everyone here as well. So let me first sort of begin by telling you a little bit about AlphaNotes. We're a New York-based firm, but throughout the years, we've really grown globally. So we have clients in the Americas, North and South, also in Europe, and currently increasingly in the Middle East. My particular background before funding AlphaNotes was really in structured finance, securitization, of which AMCs are part of. Prior to launching AlphaNotes, my experience was building structured products and working with institutional investors. I was, in many instances, the banker working with investors and asset managers to sort of furnish that product to deliver their strategy. So what we do currently at AlphaNotes is really not too different than that from the tools we use. However, our clients are 100% asset managers. And this is more specifically, this means private credit, private equity, hedge funds, alternative asset managers, those managers that have a strategies that kind of touch, whether dynamic or static, but that touch specific assets away from the, call it, conventional banking financial infrastructure. So our services really is a combination of building that legal financial infrastructure to connect that manager's strategy more seamlessly, less friction, if you will, with debt consumers, i.e. the investors. So without really knowing AMCs prior to getting into AlphaNotes, my co-founder, Florent, who a number of you know, actually, he had spent maybe 15, 20 years servicing asset managers looking for this exact solution that we're discussing here. So we really met. I brought the team that was able to structure the infrastructure, the issuer, the certificate, the notes, if you will. And he brought the audience that needed this service. To your question specifically, us being a firm based in the Americas, our initial clients were North American based asset managers looking to take their strategies to a global stage. Often that meant starting with Europe. And we had to sort of learn to structure European friendly structures, if you will. So that's how we got into the world of AMCs and structured products in general. I think one thing that sort of sets us apart is um, there hasn't really been a lot of competition for clients in our earlier stages. This was our network of professionals looking to bring their products to a global stage, and that allowed us to focus a lot on building structures. Whether it's real estate, whether it's private equity, whether it's going to be distributed in the UK specifically. Again, we built these templates. We built this relationship with banks, auditors, etc. And you fast forward, and we started in 2018. You fast forward 5 years later, and we are running into banks and non-banks AMC platforms, and we really had to learn to compete with them. This is where and we'll probably touch up on this a bit more later, but this is where we connected with Vestr, and we've been great partners thereafter. To give you a little more context, we've issued around $1.4 billion in aggregate issuance since we launched. Around 45% of the assets underlying this volume of issuance that we have done are based in the US. So there are a number of asset managers in Latin America, we've seen that firsthand, and also in Europe that are coming to invest in very niche markets across the US. To highlight one, private equity, real estate. There are a lot of nuances in those spaces. We've been able to work with asset managers to give them the financial product that on the investor side captures accredited investors across Europe and other global jurisdictions and channels the funds very efficiently from a tax perspective and legal perspective, of course, into U.S. strategies. That's been a big focus of us, sort of bringing solutions in that regard. And there's a lot of continuous growth there. But subsequently, and I would say the last couple of years, or the last 3 years, more or less, we've also seen the other way, which I started mentioning earlier, U.S. asset managers growing their portfolio of investors by going across the pond. And previously, they might have only considered setting up a fund or a feeder fund, right, very conventional. We've through sort of education, we've gotten a number of them to every time be more I guess accepting of the fact that by issuing an AMC, by issuing a structured product, taking advantage of the infrastructure that already exists, as Rico has mentioned, by SPV issuers such as ourselves, they can do that very quickly in a compliant environment, of course. And what's most important, we think one of the strengths of this product that we're discussing here, the experience that the investor has or their advisors when they subscribe to these products, it's a very familiar environment. Whereas if such investor or their advisors were to invest in a traditional private product, whether it be a fund or elsewhere, you need to go away from that custody institution, that platform, and at some point, onboard and send funds to a Cayman, Delaware, etc., private company, right? That continues to remain, in our review, a very strong barrier for mass adoption, and through an AMC or similar structured product, that friction is gone.
Let me bring Simon in to talk a little bit about the technology, and because about my understanding is obviously before these things were being done more kind of the spreadsheet type of approach, whereas with Vestr and other platforms and fintech companies coming in, things change quite dramatically in at an operational level. So, Simon, and by the way, if there are any questions from the audience, please do use the Q&A tab and just put them there, and we'll try to answer them as we can or later on. But Simon, what would you say? about the technology. What's kind of the what's the behind an AMC platform?
Yeah, right. I mean, you mentioned spreadsheet, and it's perfectly right. This was all used to be run out of spreadsheets. In fact, Rico and I, we ran multi-billion AMC operations out of Switzerland based on based on Excel, basically. And I mean, Excel is very flexible. Obviously, you can do everything a little bit different for every product, so it's very can be customized easily. But it carries huge operational risks, right? And so this became actually a problem with internal and external auditors and regulators. And so as the market grows, they don't tolerate this anymore. And I mean, more specifically, if you are off balance sheet and you have a, for example, Luxembourg vehicle, they have very strict yearly audits, and they don't accept usually if you just have some hacky spreadsheet lying around. I think the second trend that plays into this was that this product becomes more and more of a commodity. So you see the typical signs of this: the fees go down, the minimum issuance sizes go down, and if you see that happening, the degree of automation just has to come up for the economics still to make sense, right? I mean, we 10 years ago maybe it was possible to charge a 2% management fee, but now we're basically an order of magnitude lower than that. And I think the third trend that plays into this is if you're a retail investor, you in many aspects you get better tools today that you get as an institutional investor, right? So if you're a crypto retail investor, you can trade 24/7, you can leverage and buy derivatives and whatnot. And on AMCs a few years ago, if you wanted to trade, even if you bring like millions to the table and you're an institutional investor, you had to call someone up or write an email, right? Whereas as a retail investor, you could just do everything online. And so this was quite a bit of a mismatch that we saw back then, and that was a very sort of a textbook case for automation, and that's why we brought the platform to the market and rolled it out. And I think there are many sort of adjacent technologies that also relate to AMCs these days. With you see tokenized AMCs coming from the Web3 movement, and you see also AI entering the space, mostly on the doc generation side of things. So things are finally starting to move. And I think by now, if you are an issuer of AMCs and you don't offer a platform, you're going to have a hard time actually winning any deal at this point.
That's where I know. Simon, going back to you, Rico. I'm just curious. Why don't you explain very briefly? So we have the off-balance sheet. The on-balance sheet. We've got the public offerings. We've got the private placement. Can you just shed some light on the different kind of approaches to the AMC market?
Yeah, sure. So basically, when you launch an AMC, you have the option to list it on multiple different public markets. But actually, most volume that we see is traded OTC. And so when you earlier showed some statistics from the Swiss exchange, for example, or from SIX, these numbers are basically a tiny number of the actual number of AMCs that actually get created and traded. For example, you mentioned UBS. UBS has a very large operation in AMCs, and most of them are not listed, right? So when you look at the statistics just on the exchanges, it gives you the false impression that there's not that much volume and that certain players like UBS are not big players, but they're actually one of the biggest, right? So it's important to keep that in mind. Now, looking at the recent developments in the market, it's quite obvious that the elevated uncertainty has been excellent for structured products in general, and also AMCs in particular. And so our own internal numbers pretty much confirm that almost all of our clients are adding more products, are adding more AUMs, are experiencing higher turnover. And so there's definitely a lot of growth, both in a breadth and depth of products from existing providers in this market. And it keeps going as well, because these products are also increasingly popular in jurisdictions that were not previously known for such products. And so, yeah, I mean, there are different ways to create the products and increasingly many venues for trading these products. And we're definitely in a boom phase when it comes to that. You mentioned underlyings. Underlyings are increasing in complexity. So some people in the bankable world are focusing more on, for example, offering options as underlyings or even structured products as underlyings. And then in the non-bankable area, pretty much anything goes. And then there's sort of a gray zone between bankable and non-bankable, which, Simon made some examples on the crypto side where you increasingly have traditional finance products that are wrapping DeFi or crypto products. So there's a lot happening. We also see people increasingly look at more, the bigger picture. So, for example, thinking about additional data or services or tools that can be added to provide a superior service to customers. For example, we noticed a big increase in the usage of our APIs and configuration options to really tailor the offering to specific client needs and away from a generic service. So I would definitely say there's a lot happening in the market at the moment, and we're in a very exciting time.
It's clearly a very flexible vehicle, and that one kind of the link between active and passive in a way, right? Chris, from your perspective, what are the biggest operational or innovation gaps that AMCs or you as an AMC provider are facing?
I love that question, and let me give you a little preamble about my answer, because I don't know if this is a chicken and egg kind of situation, but my first answer to that question is more on the innovation side. And I look at secondary market trading. Allow me to explain myself better. Secondary market trading is very thin on the AMC space and structured products in general. We have seen as well on our end, and are excited about seeing sort of the institutional adoption, right? Whether it's UBS, whether it's other banks, we see banks and their big trading desks kind of making inroads into AMCs. But the reality is that hasn't happened yet. There's also, this is more on the institutional adoption side. On the retail side, the big problem that I have seen with platforms, securitization platform, bank platform, FPV platform, is that you add another layer to the end user, to the customer, to the advisor, to the investor, right? If they are to kind of subscribe to your platform or log in, that's another thing for them to do to kind of transact. When you look at what's happening with Bitcoin, for instance, let's take tokenization. There is adoption there, not only from investors, but very importantly from a regulatory angle. Whether it's in Europe, whether it's in the US, there is more and more adoption. All of these two things, whether retail or whether institutional, in our view, this is bringing us closer to a point where secondary market activity is become more intense. And I think from experience, whatever the financial product it is, when you issue on the primary, it's always very bespoke. Oftentimes, the purchaser purchases to hold through maturity because they know that there's no secondary market, right? But however, when you bring in that the new wealth from cryptocurrency, when you bring in institutional investors, all of that generates more availability for secondary market trading. And when you have the funds, as in secondary market trading, things tend to sort out on their own, whether it's better reporting, right? Whether it is consistency across different jurisdictions. And those things, so to answer finally your question, secondary market secondary market activity will make us better at standardizing reporting, will make us better at understanding the products and the regulatory, if you will, regulations needed to kind of introduce bigger growth. In other words, I think, lack of consistency, lack of secondary market itself is kind of keeping us, in a small space, if you will. So secondary market trading, whenever we come across, is there anything we can do to improve that? Certainly work on that, because we believe it's much closer than ever. And once the money is there in the secondary, things will get better.
So why? I mean, maybe this is a bit diverging from the AMC discussion, but why we've been talking about the need for a secondary market for many years, but it doesn't seem to appear anywhere. There's been attempts, and I think right now there is a TCI Cap trying to develop something like that. But what is preventing, a platform, an independent provider from launching a secondary market facility, venue, hub?
Transparency on pricing, I would say. Oftentimes there isn't significant consensus that the pricing is a true reflection of the value, and that is also because there isn't secondary market activity, right? How can in other markets the bid and the ask are the ultimate confirmation of what is the secondary market value of the asset. I think, Pablo, going back to AMCs, right? There has been noise, whether it is related to is this a way to kind of circumvent setting up a fund. I don't think some investors understand clearly when a fund makes sense, when an AMC after you have the fund makes sense, right? So I think at an institutional level, we're getting farther and farther away from those noises we have seen maybe 2 years ago during the pandemic. And capital is there. Once the institutions are more interconnected, right? And that also helps the availability of reporting and secondary market enhancement.
This is very, very interesting. And actually, we've seen. I think it was last year. There was a Swiss asset manager that had a fund out there that wasn't getting any traction, and they converted it into an AMC, and they just completely changed the game. But anyways, moving back to Simon and talking about technology again, what lessons have you learned, Simon? Because you're not developing to the end investor. You're working with companies like AlphaNotes, and what is the kind of learning process of developing infrastructure for to kind of deliver a solution for someone who's trying to incorporate these products into its offering?
Yeah, that's a very good question. So I think so far I've seen probably close to 50 different AMC setups, ranging from off balance sheet to on balance sheet, all sorts of different technologies. So I've seen basically every single option how you could implement this. Is quite interesting. I did never imagined that you could do it in that many different ways. And what always strikes me is that our clients, they have their setup and they are experts, so they know exactly what they have to do, right? We can actually, each time I talk to a new client, I can still learn something. So that's very interesting. But it's also a bit of a two-sided sword, because our clients, they know exactly how they want to do things. But for us as a platform, I mean, we provide sort of the same technology to all our clients. We follow an ecosystem approach, which means if we add a new feature for a specific client, we will also offer the same feature to all our other clients. So they benefit from each other mutually. But that also means that you cannot build something that is, in a way, too bespoke. You always need to abstract the feature away to a certain degree that it's reusable for all the other players out there. I think the last interesting or funny piece of information is that talking about UI, users don't really like it all that much if you change the UI all the time. And I think that finally made me understand why Bloomberg still looks same way as it looked in the 90s, you know. So better don't touch the UI too much these days, and offer everything through APIs if possible.
Great, thank you, Simon. And going back to Rico, obviously, you know, you have that visibility. You're talking to clients, and I'm just thinking, what are the biggest gaps in terms of inefficiencies for issuers today? And you know, what kind of trends do you see in the market?
I think I'll keep this one short. So I would basically say issuers that do not have a very capable technology platform are clearly falling behind in this growth market because they simply don't have the scalability to run this business efficiently. And their customers are increasingly moving to providers that have these capabilities. And we can actually observe this in real time, right? Because we see when assets are flowing into our clients' portfolios or new products get created. And of course, they also get exposed to operational risks that threaten the viability of the entire business. So basically, if you want to be active and successful in this space in 2025, you urgently need to either develop your own technology solution or work with someone like Vestr to get your ducks in order. There's just no way around it. I think I'll keep it at that because we're a bit short on time here.
Yeah, but let me just kind of add a little bit on that. So do you see that there is a tendency from players in this space to outsource that technology, set up that infrastructure to manage their AMC business, or there's still, you know, I mean, I'm guessing that UBS, or maybe not, but is there people still building their own IT capabilities to manage these things, or there is a shift towards outsourcing and using, you know, tools that are being specifically developed for this kind of market?
Yeah, it's a good question. So when we started the company 8 years ago, the situation was completely different, right? We were two young businessmen with a prototype and went into large banks. And then, of course, it was very questionable if they should work with a startup or do their own thing. But by now, you know, we've worked with so many companies and we've developed our technology so far along that it often just doesn't make sense to roll your own solution, right? Because there are a lot of implementation risks, there are a lot of risks in maintaining and updating these technologies, and so there are some holdouts. There are some of the bigger players, obviously, have their own solutions, but I think today it usually doesn't make sense to do your own thing, I would say.
Brilliant. And I like Simon to show us a little bit of the Vestr platform. But before we go to that, very quickly, Chris, one for you. What are the considerations in terms of what would you say? You know, how did you benefit from using the Vestr technology? That, I mean, I'm going to put two into one. So what would be the kind of main benefits of using, for you as a provider of AMCs, you know, this kind of technology? And what are the key factors you consider, you know, when selecting not only a, you know, a vendor for fintech or for technology, but also, you know, you as as a provider of AMCs, what are you offering, or what you know, what asset managers you should look for when selecting an issuer of AMCs?
Got it. I'll to try to keep the answer brief for timing reason. On the first part of your question, it's truly around reducing operational risk. We AlphaNotes, our background, our DNA comes from Wall Street investment banking. So we started as a financial firm, but as we evolved, we needed to become a little bit of a technology, if you will, firm as well, right? So when it came time to catch up with growth, and realizing what matters in terms of reporting to our clients, this made us look for a technology partner with a vetted infrastructure that we could integrate with. And then that's how our relationship started with Vestr. Specifically, there were tasks, when a client, an asset manager would contact us, and then we would go back to them with the response, right? We automated a lot of that. We have a portal. Our clients can have access to a portal as well. So it makes us look better, I would say. And everything has an audit trail. So, of course, that matters significantly. So reduction of operational risk. And I would say, importantly, future-proofing, to an earlier point, right? Future-proofing our business model. One cannot be 2025 active in the financial sector without really having a strong infrastructure, technology infrastructure, whether your own or whether outsourced. With regards to, what one should consider when selecting an issuer, right? And I would say maybe two things. Continuity, right? There are platforms, new and old, but if I were an asset manager, and I have been in the past, if I were an asset manager, and let's say my strategy is a 5-10 year strategy, I would question whether the issuer I'm engaging with has been around that long, or do I think they'll be around in 5-10 years? Imagine having to switch issuers mid-course, a huge headache, right? Governance and reputation is the second point. The last point, perhaps, I'll add here. Who are you selecting? Who do they work with? Do they work with top-of-the-line service providers, right? Who else, in terms of other issuers, in terms of other strategies, in terms of other asset managers, are in that ecosystem? Do you feel comfortable with the strategies, with individuals there? I would say these are things I would focus on, and then everything else kind of comes together, right? The way you interact, the infrastructure, etc.
Fantastic. Thank you very much, Chris. Simon, would you show us a little bit of the vestr platform and a couple of the functionalities that you offer and how they work?
Sure, happy to do this. So this is basically the portal that Chris mentioned, where asset managers can log in and they see their products, right? So these are the different strategies that they are running. For example, this AMC here, you see how it performed over time. At any point in time, the platform shows you exactly what's inside of the portfolio, right? So here it's a bit of a mixed bag. We have stocks, bonds, structured products, all of it wrapped into the same AMC. Even some non-bankable assets like private debt, crypto, and so on. We keep the entire audit trail in the platform, as Chris mentioned as well. So if you click on a position, for example, Apple here, it would show you all the past transaction, how it was built up over time, etc. We also have a complete version history where you can go back to any past date, date in the past, and recreate the product or recalculate an NAV as of that date. We also have a lot of, index rules or constraints, as we call them, that you can monitor automatically. Every product might have different rules, which asset classes you can invest, diversification rules, liquidity rules, restrictions on currencies or exposure or whatever. And this is all taken care of by the platform in a fully automated way. The platform also allows you to rebalance through the platform. So we've built various tools where you can either import a target portfolio or rebalance the portfolio in a discretionary kind of way. So you can actually, change the weights of the portfolio. You can add new titles, etc. And this then feeds automatically into the downstream trading systems. So if we work with bank, this is connected to their trading, to their OMS, order management systems. If you work with off-balance sheet providers, they typically use our connectivity that we have with multiple brokers and custodians. And so you have a fully automated execution through this platform. I think from a asset manager perspective, it's also really relevant and important to have access to, for example, all the fees that have been deducted, right? So we have a very comprehensive and very transparent table that shows you every individual fee deduction, be it a transaction fee, a management fee, a subscription fee, you name it. And this can be obviously exported, and you can run your own reports based on the fees, and you can reconcile the NAVs. That's very important for many of our clients. We also have an activity or audit trail, coming back to an earlier point about regulators, right? So every single change that happens on these products, so that could be a corporate action, it could be a fee deduction, it could be a secondary market transaction or some payout, whatever it is, this is logged and is accessible here in the audit log. And maybe the last point to show is that they can also generate their own reports, right? So each asset manager, when they log in, they basically get their own template. So this is like a fun fact sheet, basically. You see the most relevant terms at the top. And then what's special about this reporting is that they can completely customize and configure it however they want. So they can add their own investment summary. They can change all the metrics here. Just one example, maybe this is the price chart, right? So what the asset manager can do, they can on the right-hand side, maybe add their own benchmark to it, or maybe they want to change the color to make sure it aligns with the color that they have on their website. And now it changes in real time, as you can see. So it's a very powerful tool to generate the very bespoke client experience for the end investor as well. And so there's a plethora of options that you can click together here. And once you're happy with the report, you download the PDF, or you just store it as a template, and then you can reuse it for your next product. And most of our clients actually subscribe to get these reports automatically. We serve roughly 2,000 different asset managers by now, and each of them has multiple different reporting templates. So we generate probably tens of thousands of reports that we send out in a fully automated way. And really each report looks different because it's customized by one of the different asset managers. And obviously you can also translate everything automatically in multiple languages and so on. So this tool really not only takes care of the rebalancing and the setup of the product and the life cycle, but also of the reporting aspect of things.
That's fantastic, and obviously I don't have access to that kind of information, but I know where those cool PDFs I get from the AMC's providers come from, and yeah, they're quite interesting in the sense that you get the breakdown of the underlying assets and the performance charts, and it's quite interesting how technology is just helping to bring transparency to the market. And unfortunately the time is flying, and we just got almost to the end of the webinar. We've got 3 or 4 questions in the chat. I had a few more questions, so we're going to have to kind of just open the floor for the audience a little bit, and I'm just going to throw them in for whoever wants to pick these questions. But so one question from the audience is, do you expect AMCs to expand across other European markets apart from Switzerland? Are there any barriers which might prevent that? I mean, I know that AMCs are not exclusive to Switzerland. I know that Luxembourg, France, Germany, but maybe Rico, do you have more visibility of what's happening across Europe, and what are the chances of this expanding further?
No, that's correct. So the original market for it was basically the DACH region, but that expanded already quite considerably. We have clients in France, we have clients in the UK, we have clients in Italy, we have, this, if you haven't seen it in your country yet, it's sure to come by next year or so. So it's definitely expanding. I'll keep it short so we can do more questions.
Yes.
But
so the other one is that what is the biggest AMC out there that asset wise? I mean, we wouldn't be talking about 6 listed AMCs because those are slightly smaller. But I mean, can you give us a number in terms of what would be the top AMC that you guys have on your?
It's a very good question, and we have from very small, tiny AMCs of a few 100,000 to very large ones to that are in the billions. So close to 2 billion is the largest one on the platform.
And this is to do with the issuer this is to do with the issuer of the provider, or I mean, say UBS will have the bigger ones as opposed to a smaller asset management in Switzerland, or?
No, it very much depends on the specific asset manager. I mean, we know some banks, for example, have individual AMCs, particularly in the Asian region, that are $1 billion in size, and we've also seen in other countries even larger ones. And typically they run either debt strategies or, complicated structure strategies, or their portfolios that contain basically everything, from futures to options to, cross asset basically. So these are very interesting products. And you would think that people who have these kinds of assets would want to create a fund, but because of the flexibilities that AMCs offer, they prefer to keep their AMCs and not convert them to a fund.
Yeah, I mean it's a fantastic space. I mean we're just checking recent AMC's launch to the market, and I saw art, shipping containers, films, piggeries. I mean, you name it. Anything can be repacked into an AMC. But just going back to Chris and maybe to wrap it up, Chris, I mean, and this question from the audience is talking about two that you may answer as well, because the other one is like, by secondary market investing, do you mean different investors buying and selling the certificate via Euro clearable licensing that has a claim on the SPV? In that case, the manager of the SPV remains the same, correct?
That is correct. Both the manager and the issuer remain the same. Yes.
Brilliant. And then the last one for you, Chris. So talking about costs, what is a pricing range to issue an AMC on illiquid funds for a size of 10 million euros? Put dollars if you want.
Absolutely. Answering from our perspective, there's a setup cost and then an ongoing expense. The setup really varies on the complexities of the product and the legal and analysis. So it could range between 10,000 euros to 30,000 euros to set up. Either 10 or 30 is a fraction of what it would cost to set up a fund, right? And was there another aspect? Oh, the running. It's our fee schedule charges from 25 to 50 basis points running, depending again on the peculiarities.
Brilliant. That's great. And with this, we've reached the end of the webinar. Unfortunately, this is very, we could have spent another half an hour here easily. But thank you, Chris, Rico, Simon, for the insight and the time. And we hope the insights that we have shared today with you will help you understand a little bit more, the role of vestr and AlphaNotes and what AMCs can do and how they work. And thank you again for the time, and I hope you enjoy the rest of the day, and goodbye and see you next time.